All right, let's get to it. Haven't had a mad dash in a little bit. Of course, it's a Monday morning. We've got an opening bell coming up in a few. M&A, not that big a part of this market at this point. We will talk about Bank of New York's interest in Northern Trust a bit later, but we have a deal this morning.
Yes, and first I want to say I miss you and Carl very much, and where I went, people just truly love what we do. I love what you do, what Carl does. Just first 20 minutes, I heard over and over. First 20 minutes. Yeah, I want to say, how about the what we do with the stop trading? Anyway, David, there was a time when this, I wouldn't even bother to mention this. It's a company called Spartan Nash. They do retail, food, wholesale, supermarkets. And I mentioned this because they're getting acquired today. $1.7 billion deal, and that's not, that's not nothing. 17.
It's not nothing, and by the way, neither is that.
No. But I mentioned this because they've come on the show. They had come on Mad Money. They had 5% yield. And I would sit there and think, how could this company not be acquired? And I think that there was a sense that you couldn't do this kind of deal, that a CNS wholesale may not be able to even get away with this. I don't even think it matters anymore. I don't think any of the authorities are going to look at this thing and say, well, you know what, we can't have this deal done. I think it would have been an FTC block. Yeah, I mean, there is, of course, listen, we came into this year with the expectation that the regulatory world would be very different and that we would see just an avalanche of deals. Right. Hasn't happened. Not as much because of the regulatory concerns as so many other concerns that we've talked about endlessly here on CNBC, uncertainty being the key word. That said, there are certain areas where you probably think there is going to be regulatory scrutiny, big tech still, not for a deal like this perhaps, though. But this is one of the things that happened during the Biden administration is you'd have a solid company like this, good growth, making a lot of money, 5% yield, and the marketplace didn't want it. So you know what? CNS wants it. Yeah, and CNS was there as the potential buyer of divestitures from, was it Kroger? By the way, Kroger had an unbelievable quarter while I was away. But I just
if they had done the Albertsons deal.
Yes, but I look at this, I just say, get ready for a lot of undervalued companies that have been forlorn to get bids. Because now people say, you know what, if I don't have the big regulatory rigmarole, I do this deal, maybe it closes Brad Jacobs time. Yeah, there you go. I know, Brad. Couple months. Good old Brad competing with Home Depot now for another asset. All right, we may get to that. As I said, we will talk about Bank of New York.